G'day folks, Jim here from FX Charts. Thanks for tuning in this morning. It was a pretty rock and roll session today for the currency markets. Much of the attention, of course, was on Janet Yellen and her testimony to the Senate. She confirmed that tapering is not going to be arriving anytime soon, that the current stimulus package is going to remain in place. That saw the equity markets had a good run on that, and gold and silver moved up a little bit as well. As far as the dollar was concerned, that softened a little bit, although its momentum wasn't that great. Earlier in the day, the euro had been sold down on the weaker than expected third quarter GDP outlook, and sterling had taken a bit of a battering of its own on the softer retail sales. But they both staged a bit of a rebound later on. And if we look at the charts here, I'll just go to the euro. The euro got down to what's a 134.20 area, but it has rebounded to 135, just under 135, where there's good resistance. I don't think we're going to do too much today for the euro. I think 134.20, 135.20 will probably cover it. There's not an awful lot of data out. We've got the EU CPI later on. That might cause a little bit of volatility, and then we've got the US industrial production and capacity utilization numbers. But overall, I don't think it's going to be much of a volatile end to the week, and pretty much we're going to be fairly range bound. The interesting currency is dollar yen. Now that's broken out of its long. This is the consolidation that goes back about 6 months. That's broken higher, and I think we could see over a period of time. This is a daily chart. Yes, daily chart. The momentum indicators are pointing higher. I suspect we're heading back towards this sort of 101, perhaps 103.70 high that we saw 6 months ago. So I think dips on the downside are probably buying opportunities now, and I'm really not sure we're going to see as much back under sort of 99, 98 and a half. Sterling has broken out of its wedge formation that it's been in, but there's good resistance ahead at 160, 115. I'm not sure that we're going to take that out today, although the 4-hour momentum indicators are pointing a little bit higher. The dailies are pretty flat though, so I think we're just really in for some choppy trade, not going anywhere too far. The Aussie traded nicely up to 93.85 yesterday. It's come back down to 92.80, but then rebounded again after the softer US jobless claims data. I think we're in a 92.5 to 94 range. And for the time being, I think you just trade either side of that. Nothing really rocket science about that. The Kiwi, well, it's spiked up again overnight, but it's come back down a little bit. I still think we're consolidating above 81.90, 82, where the neckline is here for this head and shoulders. If and when that breaks, then we're heading towards 78.5. But until then, we may just be trading sideways in this choppy consolidation, and I'd probably use 83.5 to 82 as a range, and just trade that. So that's about it. There's not an awful lot of data out of Australia or New Zealand today, and as I already said, the CPI from the EU is probably the highlight of the day. So that's about it. Have a good day's trading, and we'll talk to you next week. Have a good one. Cheers. Bye.